If you have questions, concerns, and are just lost when it comes to planning for retirement, meet Steve Hoyle and Derrick Caldwell of the Hoyle Financial Group. We are right now in tax season. Derrick, how are you helping folks with tax analysis right now go through to be more tax efficient?
It's kind of two-tier, where right now a lot of clients are asking questions on taxes and things that we need to do and address, but really we're focusing on the future. New clients that come on, there's so many strategies out there, whether you have a small business, whether you have charitable deductions on file, you got to unravel that, and the main thing is we sit with people and just really focus on relationship. The more we know about you, the more that we can save you on taxes and get you with a great accountant. There's a lot of great accountants out there, guys, that can really help you as well with a partnership. And those are the things we're focused on right now is the future. And knowing what we know right now with our tax code and everything, how do we best take advantage of that? Whether it's a Roth IRA, whether it's a great time to take a capital loss or gain, things like that really come into play as we get into February.
And continuing this conversation here about taxes, RMDs, you may have heard them called required minimum distributions. They must be taken from your retirement accounts once you turn 73 so that our pal Uncle Sam gets his share of taxes. But is there leeway on when you must comply in the 73rd year for your first RMD? Well, here's Morningstar's Christine Benz.
So there's what's called a required beginning date, and this is actually April 1st of the year after the year in which you turn 73. So an example, say I turned 73 in 2024, I would have until April 1st of 2025 to take that first RMD. The tricky part about it is that April 1st RMD would be for 2024. I'd have to take another one by year end 2025 to account for my 2025 RMDs.
So, Steve and Derrick, do you recommend this strategy that essentially results in really a double tax bill here for that first year? I mean, how do you work this with clients?
Yeah, I will say, first off, no, I do not recommend it. What you're seeing there when we talk about RMDs, yeah, technically you have until the April 1st date of the following year to take it. But I'll tell you, what happens is one of two things. First of all, that clients forget to take it. And anybody that is with Hoyle Financial will get their set up the year they turn 73 or where they come on as a client. We don't mess around with RMDs. We make sure they're scheduled and they're also set up systematically to make sure that no one ever misses their RMD. But the other side of that is, I mean, we've seen it so many times, right, Steve, is that
Absolutely.
Somebody forgets to take it, and they're come on as a new client. They're like, hey, by the way, last year I didn't take my RMD, and then you're scrambling around. Don't be that. Don't do that. That's a bad way of doing things. But also, double taxation plays a big part in that. If you wait, RMDs are calculated by the year-end value of your account. So if you take one at 73, your year-end value should be lower than the next year, right? Well, if you wait, then you're stuck taking two RMDs based upon a higher calculation. You're getting charged more money, guys. You're having to take out more money on your RMDs than you would have had otherwise. There's no reason to do that. There's a lot of different strategies where you can take RMDs and funnel them into Roth accounts. You can funnel them into charitable giving accounts. You can even give them gifts to 529 plans for your grandkids. There's a lot of different things. I tell everybody the same thing. Yes, you have to take them, but you don't have to blow it or spend it, right? There's a lot of things that you can do to turn that to your advantage.
Well, I also think, Derrick, it's a great way to take those RMDs and buy and leave a legacy to your family. You can leverage that money. Nobody wants a life insurance contract, but what it really does is leave this huge lump sum down the road to your family. And I just think utilizing that funds as opposed to just building them in to your monthly spend is a huge thing, just as you're talking about.
Yeah, we've actually have a client the other day that we started contributing to their grandchildren's 529 plans,
right,
using their RMDs. Because, I mean, they got to take it anyway, right? So we've talked about that, but why not funnel it into a source that's going to benefit your family down the road? If you have that option, it's a great option to utilize. So they're very happy because they thought they were just having to put it in their bank account and get 0.5% on their money and stick it there. And I'm like, no, guys. There's so much better ways to do this.
But I think one of the things that we're still seeing, Derrick, a lot of is when that plan changed. People used to think that they could just set up a legacy and that all of a sudden that RMD, that your kids would get that every year for the rest of your life. And a lot of people have not gone back and evaluated their tax strategy with their retirement monies, passing it on. And all of a sudden they're going to pass away and go, oh, I only have 5 years. I only have 10 years to give that. And I think if you have not really sat down and reviewed your retirement monies, how you're going to pass them on, you need to see us because you're going to get caught in a bad situation.
Yeah, now a lot of times when we talk about legacy planning and tax planning, right, people look at RMDs like something that they have to do. It's a big, bad tax on the government, that kind of thing. Hey, and it is. Nobody likes to be taxed or anything, guys. But if you have $1 million portfolio that's all pre-tax money, and right now you're sitting at a 12-15% tax bracket, but your children are doctors or lawyers or engineers, or they may be at a 30% tax bracket. What this focuses on, this kind of tax planning, is even when I'm dead, I would rather pay 12% than have my kids pay 30%.
Absolutely.
Yeah, I mean, there's no reason to give the government 18% more of your money because you just want to sit it there because you don't want to take it out. No. There needs to be a tax planning situation for anybody that's listening there, guys. Don't let the government get 18% more of your money. Come on.
Yeah, keep it in your pocket.
So for the first 5 callers today, we're going to sit down and evaluate your tax strategy. Or if you don't have one, we're going to help you develop one. If you have a CPA or accountant that you want to work with, we'd love to partner with them as well. But what we don't want you to do is just continue to have a compliance officer to file your taxes every year and not have that tax strategy.
And, guys, I've asked you this before, but listen, we are in kind of a turmoil of a time here, right, as a country. Lots of big changes, lots of things happening. Some people excited, some people terrified. But it also leads to the conversation of people are more apprehensive, I think, to make some decisions with their finances. Especially right now, they're waiting for really the other shoe to drop with all these different decisions that President Trump will be making. How will it impact the economy, the market, et cetera? So what is I'll give you like your elevator pitch. We're on the elevator. You got to floor 5 to tell me why I should come down and sit with either you, Steve, Derrick, and a member of the team. Why should I meet with Hoyle Financial to get my finances and my retirement in order?
Hey, you know what? I'll tell everybody. Give your boss 2 more years or give me 2 hours of your time. The choice is yours, guys. We focus on relationships here at Hoyle Financial. All right, we get to know you to better serve you. Our family serving your family. Our job is to take care of you, not just now, but 10 years, 20 years down the road. And that is something we take very seriously. And if anything, that is what we focus on, is customer service and making sure that we take care of everybody that comes in. But plain matter of fact, guys, you got to make the jump. That's what it comes down to. And if you want to keep doing the same thing and getting the same results, right, by all means, keep doing it. But I tell you, how many times, Steve, if we heard somebody come in, they sit down with us, and even after one meeting, they will say, man, Derrick, Steve, I wish I had done this 7 years ago, 5 years ago, whatever it is. I can't tell you how many times we've heard that, right, Steve?
Derrick, I think for the past 36 years, we have families now that we have all 3 generations of their kids, their grandkids, helping them out, helping make a difference. And when you think about efficiently passing that money to the next generation, it really makes a huge difference. I think the other thing, Derrick, that we're great at is we have people call us and say, I'd love to come see you, but I don't even have a copy of my statement. Well, we'll talk to you about how to, log in and maybe go and find those documents that you need for us to help you. But a lot of people just don't know, Derrick, what they don't know, so they don't take that step forward. And I can't tell you how many people in the last 10 years have said to us, I would have retired 5 years earlier if I would have known what I know today. People are scared of the future. They don't have a plan. It's often people ask us, what about a written plan? You're not going to write the plan. We're going to partner together to write that plan and put that plan in place. So we're not going to worry about Wall Street. We're not going to worry about Pennsylvania Avenue. We're going to worry about your street. That's where it really starts.
If you'd like to sit down with Steve and Derrick or a member of the Hoyle Financial Group, visit retiretexasstyle.com.
Investment advice offered through Hoyle Wealth Management, a Texas-registered investment advisor able to provide investment advice in states where it's registered, exempt, or excluded from registration. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of loss, including possible loss of principal. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here. Content provided is obtained from sources believed to be reliable but cannot be guaranteed as to its accuracy or completeness. By contacting us, you may be provided with information about insurance products, including annuities offered through Steve Hoyle, Texas Insurance License 716036. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Steve Hoyle is not licensed in all 50 states. To find out if Steve Hoyle is licensed in your state, please call 806-371-9473.